This is the briefing for Friday, August 4th. Very interesting week this week in the stock indices, beginning with Wednesday with the downgrade of the U.S. debt by Fitch. And then, of course, we got this gap down on Wednesday and a move substantially lower on Wednesday. A little bit of recovery yesterday. And then, of course, we had a pretty good recovery today until the market turned. And of course, going into the close, we closed near the low of the day. Same thing with the Qs, the 15-minute chart. You can see we gapped down to here, came pretty close to testing this upper resistance level, and then of course broke through this 373 level, which was fairly important. Now, I want to talk about two things here fairly quickly. The first one is that if you look at this low, and where breadth was right here. If you look at this low today going into the close and you see where breadth was, it's there. So we have a pretty good divergence in breadth, and the same thing is occurring in the NASDAQ, as you can see right through there. So the market in terms of breadth, which I would suggest today is a short-term indication, not an intermediate or longer-term indication, would suggest the potential that the market is strengthening, but there are other indicators that suggest potentially the opposite is occurring, and I'll get to those in just a few minutes. Now, I do want to review one other thing because it was fairly useful for me today in my trading, and that is the three-step counter-trend rotation. Now, we know that this was a fairly substantial move to the downside. I should say impulsive move to the downside. It was supported by volume. Breadth was fairly negative, as you can see right through there. And then we got this pause right here at the 447 level, and then began this three-step counter-trend move. Now, it was pretty evident that when we tested this high, this resistance area, and then started down, and you can see there's a little pause right there, that the probabilities were such that this three-step counter-trend rotation was complete, and we were going to potentially test the low from yesterday, which comes in right around 447, and that's exactly what happened. Now, if you looked at, and there's probably two ways to look at this. And the way I did was I looked at this as leg one, this is leg two, and then this as leg three. If you look at it that way, then it projected equality between legs 1 and 3 at 452.20. This high comes in at 452.90, so it came pretty close to doing that. The other way to look at it would be to look at this as a 1, 2, 3, 1, and then a 2, and then a 3. I didn't do the calculations that way. This looked much clearer to me as being a 1, 2, 3. The same thing with the Qs. You can see this move here, and then this third step. So the equality between legs 1 and 3 would suggest that leg 3 would complete at 372.23 with an equality, and it actually closed, or it actually went up to 378, as you can see. So a little bit different here. This third leg was a little bit longer than the first leg. But then, of course, we got the reversals. So it became pretty clear in today's trading that these were three-step counter-trend rotations and that the potential for another move lower. Now, the confirming factor was that breaking this low, the leg 2 low, suggested the potential that we were going to take out the low from yesterday. Now, it's pretty important here to look also. Keep in mind that it is typical, the market knows where key reference areas are, support and resistance areas. The big traders know, big money managers know where they are. And this is basically short-term, so the short-term traders understand this, that when you come into a key reference area, unless there's a news event, the higher probability is you're always going to see some type of a pause as traders step back and try to determine whether there's enough strength to continue the trend. So you can see right at yesterday's low in the spiders, we got this pause. Breaking that pause then suggested that we were going to take out this low and trade lower. Now, we came into the close and closed near the low of the day, which suggests that the potential for follow through in Monday's trading is certainly there. Now, the same thing happened in the Qs. You can see the move down here. This 372 area was really the key reference area to watch, and we got this pause just above it before we saw that 372 area broken and taking out the low from yesterday once again. So, and you can see that that occurred on pretty good volume going into the close today. So basically, where we are from a short-term perspective is all of the support levels that we looked at previously in the indices really are now resistance levels. Now, looking once again at the IWM, the Russell, you can see that it basically had the same situation here. I didn't put a trend line up here for this to be broken, but you can see that this is the low and this is the pause that we got going into the close. So once again, now the thing to watch for on Monday, a break of this area of rotation or break of this area of rotation about 448 in the spiders of 194.50 in the Russell, and about let's call it the 373.50 area in the Qs. Breaking that high would suggest the potential that potentially this is complete, and we're going to go back up and test this 378 level or the 453 level in the spiders. Continuing to break down, breaking today's low, would suggest the potential for the beginning of another thrust lower. Now, that is going to be extremely important. The key to that is going to be what happens with volume and breadth. Because we have this breadth divergence, it suggests the potential that we could see additional upside in Monday's trading, unless breadth weakens on additional movement to the downside. So it's going to really come down to what happens with breadth on Monday, especially if there's lower prices. If breadth is not, I should say, collapsing or just really going pretty negative, then that would be a warning flag that potentially this whole move is coming to an end and we're going to see some type of move back to the upside in all of the indices. Now, the importance here, that's kind of the analysis of the shorter term charts. Now, the longer term charts, the daily charts, this is just very, very important. You can see that we've got this rotational pattern here. This high comes in right around 459 and this low comes in right around 445. You can see we're testing that 445 area. Any movement to the downside in terms of price development that breaks 445 and that continues the decline. Now you can see this is a pretty good decline in market breadth. This is the short-term divergence I was talking about, where you see breadth was here at that low on Wednesday, and it's here slightly higher on Friday. So that's the short-term breadth divergence. But from a longer-term perspective, it appears that breadth is beginning to develop into a trend to the downside. So what happens Monday at this 445 level in the spiders is going to be critical. Breaking that and closing below it is going to open up trading down to the 430 level, which is the next lower key reference area of this area of pause. So it's going to be very, very important to see what happens in terms of this support level from a longer term basis. So I should say probably an intermediate term basis. This is just very, very important if this is broken. Now, the same thing is occurring in the NASDAQ, and you can see this rotational pattern with an upper extreme at around the 388 area, and this lower extreme, which is the upper extreme of this area of rotation, comes in around 372, 373. Now, once again, you can see the divergence in breadth between yesterday and today, Wednesday and today, in terms of the NASDAQ. But also you can see that this trend in breadth is trending down as well. So once again, it depends on what happens on Monday, and if we have lower prices, breadth needs to be lower than it is in today's trading. That would open up a potential test of the 355 area in the Qs. In the Russell, same situation. We've got this area of rotation. I've got this set at 200 mainly just to keep it in a more even number. It goes back to almost this high back on February 2nd of this year. So watch the same thing. You can see the divergence in breadth that we saw today, but then again, we've got a decline in market breadth going into today on the daily chart. Important area is this 193.50 area. Breaking that's going to open up a potential test of 190, and breaking that is going to open up a test of 180. Now, yesterday we worked off some of the oversold condition that we saw going into Wednesday, or coming out of Wednesday's trading. Same thing with the Nasdaq. We closed. This is where we closed yesterday. So the averages were converged. It suggested that we were going to get some type of a fairly large move in one direction or the other. I would have to say that really didn't happen. What we had was basically a pause and a rotational pattern today, even though we tested the lows of the day, or the recent lows. So this now gives us gives the market, I should say, the opportunity to go in either direction. Closing at the low of the day is always a higher probability there'll be follow through the next trading day. That is not 100%, but something that certainly is in our toolbox when we do our analysis to be watching out for. So we're basically neutral, so that gives us the ability to either recover and test resistance on Monday, or we're going to see a continuation of the move lower. And I cannot stress enough how important those lower key reference areas are on the daily chart. Looking at total volume in the NYSE, you can see it is picking up over the last couple days, and you can see it's picking up in the Nasdaq also, except it fell off slightly in today's trading. But you can see the Nasdaq at yesterday's close, volume was above what is normal, what I would say is normal for the Nasdaq, and we're about mid-range for the NYSE. So watch volume, especially in Monday's trading as well. Now, the other indicators that I've been using, the percentage of stocks above the 50 and 200-day moving average. Now, this breakthrough occurred on July 25th and 26th, and I think I covered this in one of the briefings back then. And I don't think I paid much attention to it because it was a break, and I really expected to potentially see it move back again, mainly because we were not seeing the same thing with the 200-day moving average. But you can see there's a lot of damage that's been done in terms of the percentage of stocks above their 50-day moving average and 200-day moving average. So we've come from about 88% on the 50-day moving average down to almost 60, just below 60%, and the same thing with the 200-day moving average. We're down to about 60%, whereas we were up to about 73, 74%. In the Nasdaq, we're seeing the same thing. We saw this break of the trend and the 50-day moving average, and you can see that we've got a little bit of a rotational pattern here, and we broke through the lower extreme yesterday and basically flat in today's trading. So the Nasdaq showing a little more strength than the S&P 500, and the Russell has been in a rotational pattern, and it appears to be getting ready to test the 55% level, and the same thing is occurring in the 200-day moving average. It looks like it is about to break through in that regard as well, and you can see the rotational patterns in the Russell for both the 50 and the 200-day moving average. So, in summary, it's going to be really important to see what happens on Monday. I cannot stress that enough. Monday, potentially into Tuesday, are going to be very, very important days. Have a great weekend, and I'll pick this back up for subscribers on Monday.